Awesome. Thank you all for joining us today. We're going to go ahead and start the webinar. Awesome. So first things first, just a few notes before we dive in here. Some of you may have gotten an email about some pre-loaded lithium assets for this webinar. If you haven't signed up for that yet, that's no problem. You can go ahead and use this link that I'm dropping in the chat to go ahead and add your email to it and sign up for your Prospector account that will have pre-loaded lithium assets on it. And that way you can follow along with the webinar and check it out afterwards. And that is completely free. So just a quick introduction to the Prospector team. My name is Jess Scanlon. I am the head of new media here at Prospector. We also have John Godbout, who's going to be doing our presentation today. He is the co-founder and COO/CTO. We also have Emily King on the panel today. She is our founder and CEO. We're also joined by Gotham, who is our head of corporate development, and Jess Allman, our head of sales and marketing. So we've got a great team here today. First things first, before we dive in, just a quick overview of Prospector. We specialize in complicated technical mining disclosure data. So we work to make it easily accessible by everyone. We currently have over 10,000 global mining projects in our database, and we're constantly growing. We've made it easy to take the mining industry with you wherever you need it. We have a web-based application. There's no need to download any software. You can just open it up on any computer, anytime, anywhere. And we also have a free mobile app available for iOS and Android. We also offer different user licenses to fit your specific needs. With that, I'll go ahead and hand it over to John.
Thanks, Jess. So thank you everyone for your time today, and looking forward to kind of diving into using Prospector to look at lithium mining projects. So first off, why should we care about mining investment in lithium? And I think this is something we're all seeing. If you're on this webinar, you're probably well aware that as we look towards the electrification future, particularly around electric vehicles, we need a lot of lithium to meet that demand, right? There's a lot more lithium that's needed for these batteries, and it's a constant thing that we're seeing out there. And more interestingly, over the last couple of years, we're seeing the price of lithium carbonate skyrocket. So as we go through projects today, a lot of the assumptions that are baked in are actually somewhere around $10,000 per ton. And you can see right now the price is sitting just slightly below $70,000 per ton, and reached the high last year of $87,000 per ton. So we're seeing kind of this very interesting market for lithium, right? And if we think about a project, right, if those prices sustain, right, or even if they come back down and they're still 20 or 30% higher than they were in 2021, that is still a significant value improvement for these lithium mines. So it's just important to remember. So as we go today, just something to keep in mind, definitely going to be a big part of when we actually look at the lithium assets themselves and start comparing net present values of those mines. Now, before we dive in too deep, I think that it's just important to remember the different types of lithium deposits that we track. So one, there are salar brines. These are mines where you typically are you're doing a well field and you're extracting that and letting the brine go out, versus a hard rock mine, which is more conventional open pit, versus clay and other sedimentary type deposits. So we'll look at each of these today as we go through the different mines. But just important to understand the distinction between the different processing methods and mining methods associated with each type of deposit. Additionally, when we look at comparing assets, for all of our lithium assets in our database, they capture, as resources and reserves get reported, sometimes lithium is reported directly, sometimes it's Li2O, and sometimes it's lithium carbonate equivalent. And so what we do in order to enable ourselves to look at things at sort of a consistent level across all mining projects is we do conversions based on the standard lithium to lithium carbonate conversion of 5.323, and the lithium oxide to lithium carbonate equivalent conversion of 2.473. So as we go today, you'll see the different assets. They may have lithium, they maybe have lithium dioxide, but everything is going to have lithium carbonate equivalent, right? And that's what we use to kind of help normalize the analysis, because sometimes a resource may be reported with only lithium, right? But we want to look at what the end product is, and the thing that gets the price is lithium carbonate equivalent, right? That's the best way we can look at the economic value of the mine themselves. Now, with that, what I'm going to do right now is I'm going to jump back out. I'm going to come into Prospector, and we're going to take a look and see if we can find some lithium projects. So this is our lithium homepage. This is our, sorry, not our lithium homepage. This is our Prospector homepage. I've already applied a filter here. So this is all of the lithium projects that we have globally. Whether there's been a report in the last year or not. And when you come into our app, what you can do is you can apply a number of different filters. You can pick by mineral, you can pick by country, you can then pick by estimate level or project stage. So in this case, maybe we want to look and see, okay, well, what's in a PEA, pre-feasibility, permitting feasibility, construction, and production stage? This will quickly filter everything out so we can take a look. There's about 26 lithium projects that fit these criteria, right? We can see where they are globally. We can look around. We can get a picture of, we can get a list of these projects themselves. And so let's say I want to take a look at this particular project, the James Bay. I'll click on the project itself. It takes me into the project page. We get a little basic description of the project. We can see on the map where it's located. Mineral estimate levels. The last technical report was filed in January 11th of 2022. We can see it's 100% owned by Alchem. A little bit on the owner. We can look at the history of technical reports. Looks like there's been quite a few. And then we can get into the actual details around the mine life. So it's a 19-year asset. We can see that there's the processing metrics, the mining metrics, the production costs, production, capital expenditures, royalties. And what's really great is when you look at all this, you can always click on the data point. And so in this case, let's look at the total production value. And the little pop-up's going to come up here. And what this is going to do is it's got the metric that's cited that we were looking at before. It's also going to tell you the source document. So it's from this 2022 technical report, tells you the section, the figure, the page, and then it gives you a little annotation. So what it looks like here is and we'll take a look at this in the document right now, is what was reported was lithium dioxide, right, as the total production. But since we're trying to equate everything to lithium carbonate equivalent, the analyst that helped collect this is just making that normalization and letting you know that that's what's going on. So if I click open, this will open in a new tab. It's going to go to the actual technical report itself. And then we saw that it was on page 390, so we can go look. And this looks like it's pulling it from a mine life table and production summary. And it looks like it's pulling the total recovered amount that was there. And so that's where they're doing their conversion based on. So again, this is what we try to do at Prospector is every data point that we capture is cited to a actual public disclosure document, and it's cited to the page so you can go and look at it yourself. Now, in addition to the mine life, we also have resources and reserves. So I'm going to look at the LCE. Look at there's a probable reserve of 2.5 million tons, and there's an indicated of 3 million. If I want to, I can then go and look and compare it against other assets in our system. Ranking, growth. There's no production at the moment, so. Let's go back again. We can maybe look at another mine. Maybe we'll go look at. I'm really interested in Thacker Pass lately, so I'm going to come in here. This is a clay deposit type. And again, same thing. We get a little description of the project, where it's located. It's owned by Lithium Americas. List of technical reports, mine life, and the resources and reserves. Here's the lithium. You want to look at the lithium carbonate, we can look at that as well. And what's great is you can always download the data or print a little, you can print the chart itself. And if you want to see a list of all the annotations, that's always right here as well, where it's telling you how they calculated different aspects of the resource and reserve. With that, what I'm going to do is go back to the presentation and hand it over to Jess.
Awesome. Thanks, John. Those are fantastic insights into the global view of lithium. If you want more information, Prospector's 2023 Lithium Resource Report gives further detail into these projects, including global resources by category, like you see here. If you'd like to download the free Prospector 2023 Lithium Report, I'll add that link to the chat right now. Pop that in there. It's free to download, and you can just go ahead and click that link and go to the download page. So, John, now that we have a view into all of these projects, how do we compare them?
Yeah, so this is where we bring in our net present value calculation tool. Now, there's a lot of different metrics that you can calculate to compare and contrast mines. What our NPV tool is really meant to is to give you a quick sense of what's the overall value of mine A versus mine B. And the way this gets calculated is we take the total value of the sales, so looking at some sort of price assumption times the overall production of that mine, reduce, take away the OPEX, take away the CAPEX, get to a gross profit, apply a tax rate. Again, this is something we can play with inside of the tool. Get to a net profit, then take out the royalties, and then finally get to a future cash flow. And then take that future cash flow and apply a discount rate where you can get a quick sense. Now, what's important to remember about our NPV tool is it's looking at this at a flat line throughout the project. So it's basically assuming that there's going to be a consistent production, consistent cost, right? And we know that's not the case, right? It's going to go up and down. We're working on some ways to allow for those nuances, but that being said, it does allow for a quick analysis to get the sense of the overall value of the project itself. And what I'll do now is we'll actually walk through a bunch of the projects in our system, and we can see how this works. So if you're following along, we've gone ahead and we've added a bunch of these analysis already to your account. So if you go in and you look at any one of these, you should see Salar de Atacama, James Bay, Thacker Pass, and Falciani. And if you want to, you can click View, and this will take you right into the calculator itself. If you're looking to do it from a project, so in the instance of this project we were looking at before, which is the Thacker Pass project, you can just click on the calculator button and it will open up the NPV calculator so you can create your own. Just click on this and it's going to open up and it's going to let you play around with the assumptions. Now, what I'll do is I'm going to start with Salar de Atacama. This is one that I had put together based off of life of mine. It's a 24-year mine life based on the metrics that we've already captured. If I apply a 10% discount rate and looking at the overall production, I'm putting a price of $4.50 per pound, which equates to about $10,000 per ton. So if you remember the prices earlier, we were talking it was as high as $70,000, $80,000 per ton at the moment. This is looking at a $10,000 per ton price rate, which is pretty standard in a lot of technical reports over the last couple of years. But we'll play around this and we can flex it around. Salar de Atacama's got kind of a unique royalty setup, as well as a pretty high tax rate. So it's a 25% royalty. And if the price goes above $10,000 per ton, it actually goes to a 40%. So we'll be able to take a look at how that affects the model itself. And then we take in the OPEX cost and the mined ore. And once you're inside the NPV calculator, you'll get this overall value. But then you get the little breakup of that buildup I was showing you on the other side. It kind of tells you how to get to that net present value. And if we look at this, and so let's say I want to change the price to $9, right? Our net present value is going to go from that 1.8 to $5 billion. But the thing about that is we then got to think about, okay, well, not only is that price going to have an effect, but since the royalty structure, so if we look at these notes down here, it says royalties are 25% when the price is between 7,000 and 10,000 LCE, right? So if we're at $9, that's well over $10,000 per ton. It's going to go to 40%. So we need to change the royalties to actually 40%. And as I do that, you'll notice that it's actually going to change the life of mine, the net present value. I can even play with the discount rates. Maybe I think that this is a less risky jurisdiction. So maybe I want to go with an 8%, or maybe I want to go with a 12%. I think it's riskier, right? So this is again where we can play with all these scenarios. We can then save it. I'll add to the list just as I've already kind of preloaded for everyone. Or you can print it. I print it out. It's going to give you a little view. Okay. Something you can use in a presentation. If you're quickly looking to analyze a bunch of projects, just copy, paste, and add in. Now, I'm going to leave this, I'm going to put this back at a 10% because that way we can look at all these projects separately. And we can see here that this particular project is going from about a 4 billion at a high, right, at $9. And then let's see, we go back to the $4.50 and changing the royalty back, it's 1.8. So, you know, pretty big change with that little price adjustment. And then if we want to go and let's go compare another one, right? So we'll go back to my Prospector section. I'll go to my saved MPVs. I'm going to look at James Bay, and let's look at a James Bay at 450. So James Bay is not 1.8 billion. It's 521.9 million, right? It's got a life of mine of 859 million pounds, right? Which is a lot less than the 3.6 billion that Salar de Atacama has got, which we would expect a lower NPV. But the royalties are much lower and the tax rate's much lower. Now, if I go and let's just maybe we say, okay, well, this is in Canada, so we want to apply a lower discount rate, so let's say 8%. It goes from 5.99. So slight improvement on the discount rate. But then let's look at the price. So if I go to $9, it now is going on to 1.8 billion, right? So the price is dramatically, it's almost tripling, more than tripling in value, right? So if we're looking at comparing the projects, again, this is another good rate to look and compare and contrast. Now, going back to my Prospector, again, we'll go back to the saved NPVs that I've preloaded for everyone. Let's take a look at Thacker Pass. This is probably the highest value one we see. You see at 450, this is 3.5 billion, right? Now it's got 6.9 million pounds of production over its life, which is, you know, nearly double what is there for Salar de Atacama at the moment. It's got a lower royalty rate. It's roughly a similar tax rate. So it's looking like a pretty good asset. Now I'm going to change the price, and when we change the price, we go from 4.8 to 8.4 billion. We can look and see how this affects things. Again, if you play with the price, it's going to go up and down. You can see the changes. Over here is the 3.5 billion, right? And then if we go to 9, it's going to 8.4 billion, right? Definitely our most valuable asset as from a net present value standpoint at the moment. It's a 46-year mine life. Maybe we want an even lower discount rate. It's going to increase that up to 11.6 billion, right? Now, we'll move on to our last project here, which is the Falciani project. So this is one in Peru. Again, this is another 2.1. So it's got a higher initial NPV at 2.1 billion than the 1.8 at Salar de Atacama. But, you know, maybe we don't want to look and compare those as the same discount rate. Maybe it's in Peru. We know that, you know, Peru is a mining jurisdiction right now, is running into some difficulties. Maybe it's a risky, but this project is not going to maybe as likely move forward. And so we want to apply a much higher discount rate. So let's say we move that to 12%. Now it's almost the same as Salar de Atacama. And if I were to move up to 14, right, now it's less, right? So this is, again, another way to compare and contrast. And if we move it to a discount rate of 10, and I play with the price, so it's 9, 6.6, right? Again, higher than Solar out of Coma, but if I put the discount rate, it's going to be lower, right? So this is just different ways to play with it. And if you want to play with any assumptions, you can always play with the different ones. You can add royalties, right? If I had changed from 1 to 10, maybe I want to change the tax rate to 40%, right? I can look at the mining costs. Maybe I think those mining costs are relatively low. I can change it to 8. Processing costs, maybe I think it's going to be more like 60, right? You can then flex and see what the different scenario is going to look like, and play around with those over time. And maybe I think the CapEx is going to be an extra $1 billion. So I want to put that here. Again, these are just different ways in which you can flex and look at things and compare and contrast the projects. Right. With that, what I'm going to do is I'm going to bring this back over to Jess. If you all want, this is the overall comparison, right? Looking at $4.50 versus $9, holding the discount rate constant. We can see that Packer Pass is the one that's got the highest NPV at both levels, but we can see that there's slight differences. Solar out of Coma in particular doesn't seem to have as much of a growth rate as say Balchani, largely due to the taxes, right? That increase in royalties from 25 to 40% has a big effect on it. So it's just something to consider when we look at the future of the lithium prices, right? So depending on where you think the lithium price is going to go, that may affect what mine is actually a better investment at the time. And here's the overall summary of all the different NPV values, taxes, royalties, and the future cash flow over the life of the projects.
Awesome, thanks. So just a reminder, again, we have free prepackaged lithium materials. All you have to do is sign up for the Prospector here. So I just dropped that link again in the chat a little bit ago. So feel free to do that and we'll get you all set up and have it all prepackaged ready for you. With that, we're going to take a quick pause for any questions that we have. I do see one here. Is where does your data come from? John, you want to take that?
Yeah, so all the data that we have are based on public disclosure from publicly traded mining companies. And what happens is we analyze these. We have a set of natural language processing tools that tag these type of documents together. And then we have analysts that then go and verify, who are typically geologists or mining engineers, to validate the inputs. And we monitor this on a daily basis. And we typically have about a little bit less than 24-hour turnaround from getting a file disclosure coming out to when the data is hitting our database and available on the platform.
That's great. So fast. We have another one here. How comprehensive is your project database?
So at the moment, we cover every project that is owned by an ASX, TSX, CSE, Johannesburg, and London Stock Exchange company and New York Stock Exchange companies on our platform. We also have a number of projects that have transferred ownership to, say, a state-owned entity or to a non-publicly traded company on one of those exchanges that we do have as well. Although just given disclosure requirements, we don't cover more on those projects after that because it's a little more difficult to keep track of the resources and reserves. We are expanding into some of the private companies out there that do provide pretty decent disclosure on their activities, as well as adding in some of the Chinese companies and some of the other larger mining companies out there that are not covered on those exchanges. But we are pretty comprehensive. I will say, looking at our project count, a big thing to remember is we typically don't count a unique deposit of a mine as an individual project. What we do is we look at the whole list of projects in a particular area that are linked together and consider that one project. So when we say 10,000, right, and you think about some mine out there that maybe has 6 or 7 different deposit types, those aren't individually counted as projects when we talk about 10,000. those are counted as one, right? So we do have pretty holistic cover. We do cover globally of any company. So if a company owns any asset in any place in the world and they just have to disclose about it through their public disclosure documents, we capture that and add it to our database.
Awesome. So comprehensive and ever growing. Love it. Some more questions coming in here. Can I track projects and get alerted when they change stage? What can I set those email alerts to if this functionality exists?
Yeah, so right now we have email alerts set for when technical reports happen, but that's a good point. That's something that we are looking at to do, those email alerts for when projects actually change stages. So that's high on our feature list to do so. We do highlight, you can do save searches that basically look for disclosures that come out. So anytime a new disclosure comes out from a company, you can kind of set a preset filter so that you get alerted on when that's happening. So that's one way to do it. We did add a save search for everyone so that anytime a Lithium technical report comes out, you will get an email notified of that. Those are oftentimes, one of the big gates that are updating the stage of a project. But we know that there's, sometimes this happens in these happens to press releases or other types of disclosure documents. But if you are subscribed to that and you maintain that technical report, save search that we've added for everyone, you will get alerted anytime a new technical report comes out.
Awesome. Yeah, and just to reiterate that we have set that up for Lithium. So if you sign up through that Lithium link, you'll get an email alert whenever a new Lithium technical report comes out. So that's really awesome. And that's all pre-set up for you all through that link. Our products specified in more detail, say spodumene premiums, etc. Potential of byproducts, are these already included in the production costs?
Yeah, so when we talk about OpEx, the OpEx is typically the metrics we're capturing are based on either the mined or milled ore. So it's that's including all those costs. However, when we are capturing production cost, right? So ongoing production costs rather than the life of mine plan, what we do is we capture our production cost metrics and our production in a number of different ways. So one, when we get production, we do all main metal and byproduct metals that are reported on. Sometimes companies will only report on equivalents. Sometimes they, so it all depends, right? But we capture whatever is available. When it comes to the cost metrics, if we're looking at the relative cost, say of lithium carbonate, per ton, what was the cost of production? We categorize those into a couple of different categories. So one, and it all depends on how the company reports. Some companies report on a byproduct basis, some will do on a co-product, or some will do on equivalency. So we do denote those different type of cost metrics so that you can compare and contrast and understand what's out there. I don't think we have as much time today to dive too much into the production, but happy to do a follow-up to kind of go into more details of our production data. But since we're focusing more on sort of pre-production assets today in this webinar, but definitely something we can follow up on to show you more.
Awesome. Yeah, it's something that they can play around with themselves with their free Prospector account too, right? Cool. So just another question while we're waiting for some questions here from me. So we have 48% of our attendees here that say that they'd like to invest in lithium, but they either don't know where to start, they haven't found a right project. So John, maybe we can go back to the advanced search a little bit. And just kind of show the different search options that we have available to help you find projects in either the jurisdiction you're looking for, the project stage you're looking for, et cetera. Just kind of show that a little bit.
Yeah, so if we're looking at lithium, we've already applied our stage filters we were looking at before, but maybe we want to go a little earlier. So we'll add in ones that are have target drilling or just a resource and not just a life of mine plan. And then let's say, so we have that. We can always do estimate levels. So there's the categorization. So if you only want to look at ones that have at least an inferred or indicated or measured or none at all, right? If you want to look at very early stage assets, a great way to do that is to do the not mentioned or just pick grassroots and target drilling from the list here. You can pick by exchange. So if you want to look at only the ones that are from a particular exchange, you can look at filter that way. And then by country, right? So if we only want to look at, say, North America, right, apply a filter, and that's just going to show us only the projects that are in North America, right? to look at, right? So there's all those different types of filters. We are in the process of adding another one for deposit type. So in particular, let's say you're only interested in brine assets, right? Or you're only interested in hard rock asset or clay assets, right? We'll have deposit models where you can actually filter by those type of assets in general, right? Because there are different pros and cons of them, and they're different cost models, right? And to look at. And then also, as you're sort of diving in, and once you pick a project, you can, so if I pick on, where's the James Bay one was up here. So if we pick on the James Bay project, I think it's this one, and you go into the project itself, the most natural way to invest is most likely going to be into the company itself, right? So what I would advise is, if you find a project you like, then go check out the company that's tied to it. So in this case, if I'm looking at James Bay project, maybe we look at Alchem and see what other projects they have, right? And you just click on them, and this will load a company page where you can learn more about the company in detail. And it'll give you a little summary, and it'll give you some metrics about how they're performing. It'll give you kind of an idea of where their projects are. So they get a lot in Argentina. There's one in Colombia, right? We got one in some in Western Australia. You can look through all the different projects. You can see their news releases that have come out. So they got a drilling update and a recent asset on Catlin. Their resources and reserves across all their projects. Let's check 2021. Not all 2022 has been filed yet. You can look at their production. And you can always flip between the attributional basis and the percent basis. I don't think there's any more on that. Let's look at the lithium costs. Yeah. Looks like they have byproducts of 18 cents per pound. Asset. Again, and then yeah, so those are all the details that are out there on the companies themselves, and a good way to go check them out.
Yeah, for sure. So like that's one thing that we really strive to do at Prospector is, if you have a deposit, whether it be lithium or gold or anything, we've made it easy to find projects that fit your needs and learn more information about them to build confidence in your investments and bring more investment into the mining industry. So John, next question. Do you have projects in Africa, and where? You're already on top of it.
Yeah, give me a second here. There are quite a few projects in Africa. The question will be, is the ones that have lithium. So I'm just gonna, looks like we have 19 lithium projects in Africa. Looks like it's a permitting and feasibility stage. Technical report, production, resources and reserves. This might be one you want to take a look at. Yeah, so we have lots of different projects that are out there.
Perfect. All right, so we have a couple more questions as well. These are great questions, so I'll keep them coming in here. Are you including information about historical mines or about the claiming status, for example, in the USA from BLM, or about new targets, initial exploration states, or prospective areas?
So we include anything that's disclosed inside of a public disclosure document by a publicly traded company. So if that includes something about a claim that they've made on BLM land, yes, we will do that, right? But it all depends on whether it's being disclosed by the companies themselves.
Awesome. John, Emily, Gotham, Jess, any other final remarks that you want to tell everybody? Anything?
Just want to thank everybody for joining, and just a reminder again in that chat, if you don't already have a Prospector account, or if you do have one and you want all of these lithium projects dumped into your profile for you automatically, just click that link that Jess put in the chat, and we'll get all that set up, either set you up with a new trial account and get it preloaded, or if you already have an account, get all that data loaded in there for you in addition to what you already have. And look forward to hearing what you all think.
Awesome. Well, sweet. Again, thank you all for joining us. Just to echo that, feel free to drop us an email, and we hope you all have a great rest of your day. Bye, everybody.
Bye, thank you.
Bye.